Can you get a business loan with bad credit? Hi guys, thank you so much for joining me. Today I want to talk to you about the idea of getting a business loan if you have bad credit. And the reason this is on my mind today, just so you know, is because I'm re-recording one of my courses that is out on Udemy and out on my personal site that is called The Complete Guide to Business Loans. And the section that I just covered is how credit affects your ability to get a business loan. The first thing I want you to understand about this is that when you apply for a business loan, there are actually two types of credit that you can and will have. The first is obviously your personal credit. Everybody should by now understand the idea that most likely you have some sort of credit score associated with your Social Security number, with yourself individually. But I want you to also understand that your business can have a credit score as well. This works a lot like a person's personal credit score. It even has a numeric number, but the way it is scored is a little bit different. And what goes into a business, a credit score, is how you pay lenders, much like a personal credit score, but also how you pay your suppliers. So if you're buying supplies from someone in your business and they give you what's called 30-day terms, but you pay every 45 days, that is going to show up on your business credit and affect that business credit score. Now, back to personal credit. Personal credit is also pulled on a business loan because the credit of the owners tends to say a lot about their willingness and ability to pay back a business loan. And what you need to understand is that personal credit in and of itself should not force you to get declined for a loan. Now, if you've got really terrible credit and you've had some bankruptcies, maybe you've had some recent foreclosures, those types of things, then yes, it's going to impact your chances for getting a loan. But what I'm trying to tell you is that score, that credit, that personal credit score, all by itself shouldn't get you declined. It'll really hurt your chances, but there should be other factors that go into getting declined. The other thing to understand about personal credit is that they will pull your credit from either one of three main credit providers, and that each of those credit providers tends to look at your credit score in a different way. There'll be some variance in the score that they each come up with, but there shouldn't be a huge variance in that score. Now, those three main providers are Experian, TransUnion, and Equifax. And if you have ever been declined for a loan, you should have had a chance to see your personal credit. Or even these days, you can go to places, I think it's freecreditreport.com, and get a free copy of your credit report. And I highly recommend doing that so you can see where you stand today. It may even be that your credit card provider, a lot of them these days are providing access to your credit score as part of their services. So know that your personal credit will be pulled and it will impact your chances. Generally, anything above about a 650 or 670 or higher is going to be considered good, or anything below that is fair or poor. And those lenders are going to be looking for that 650 and above category. Now, can you get a business loan if you have really bad personal credit? You can, but what it means is you're going to pay a lot more for that loan, and you're also going to have to probably come up with some additional characteristics or factors that will get that loan approved for you. You may have to come up with some collateral. You may have to have some liquidity, some things like some cash in the bank, those types of things that will really entice them to make the business loan if you've got really bad credit. Maybe they're going to give you less than you asked for, but you can rest assured if you have not been taking care of your personal credit, you will pay more for a business loan, regardless of the business idea or even how it looks. So can you get a business loan with really bad credit? You sure can. But the thing to remember is that your personal credit is something you should safeguard and is going to be pulled for you and anybody else that is going to be on the loan. So right now I'm going to share with you the course lesson that I just shared on this. For more information, I hope that helps. Have a great day. In this lesson, we'll be talking about how your credit scores can affect your business loan application. This particular section is regarding your personal credit scores. However, it's important to note that you may also have a business credit score depending on how long you've been in business. That business credit score, for informational purposes, actually is much like a personal credit score in that you are assigned a numeric number. That number is based on how you have paid debts with various lenders, as well as how you have paid your suppliers if those suppliers provide you terms when you do business with them. So always remember that a lender is likely to pull not only a personal credit score, but also a business credit score if you have an existing one. For now, though, let's talk about how personal credit scores can impact your business loan application. So how does credit work? Well, there's three main credit bureaus that your information will be pulled from. It could be pulled from one or it could be pulled from multiple of these providers. The main three are Equifax, Experian, and TransUnion, and each of them has their own scoring methodology. However, for the most part, those scores are pretty consistent across the board. You shouldn't see a change of a couple of hundred points across the different providers unless one provider for some reason has inaccurate information on you. Just know that they are pretty standard, and the way in which the credit scores are calculated by these different credit bureaus is also pretty standard. You should know what your credit score is going into the business loan application. There are a variety of resources out on the internet that can provide you free access to your credit report. Also, if you've been denied credit previously, you should be able to pull that credit report for free as well. One of the things you'll want to know about applying for a business loan is that marginal credit is okay, but terrible credit is likely not going to be okay. And when I refer to terrible credit, what I'm talking about is having recent bankruptcies, foreclosures, or some of the bigger items when it comes to your credit. At the end of the day, protecting your credit is a good thing to do. Making sure you're paying on time is very important because it will keep the cost of any loans down that you get in the future. So what is a good score? Again, as I mentioned, each credit bureau has their own methodology for calculating your score. And so this can vary slightly. But in general, anything over 800 points is considered absolutely exceptional. Anything between about 740 and 799 is considered very good. And anything over 670 all the way to about 739 is considered good. As you can see on the screen, this range starting north of 670 points is typically the preferred range for a lender. Anything below that is considered fair or very poor credit. So things that can negatively affect your score, obviously you need to make payments on time. The whole point of having a loan is making your payments so that the lender can recoup the funds that they've lent out to you. So making your payments on time plays a big role. Also, too many recent inquiries, meaning applying for too many loans with various lenders, can affect your score. What you should know, though, is that if one lender is pulling your score, it won't impact it dramatically. It takes multitude of lenders pulling your score at the same time to even move your score just a few points. A high utilization can impact your credit score. What that means is if your credit line on a credit card is $10,000 and you have borrowed $9,900 against that, you have a high utilization. So that can definitely impact your score. For example, most cards have a balance that is 70% of the allowed balance. That is the general range for keeping your utilization in check, south of or below 70%. And of course, big items such as bankruptcies and foreclosures can really impact your credit. So what if you have bad credit? Well, credit alone shouldn't get you declined. Know that any good lender is going to look at your application across the board, or as we call it, globally. So terrible credit alone will likely not get you declined. However, terrible credit starts you out on a bad foot. It's likely that you'll have a higher business loan rate if you have terrible credit, just like in your personal loans. So if this is the case, you'll want to consider alternate lenders. These are lenders who will lend to more risky individuals based on collateral and other factors. And know that they underwrite these loans in a totally different manner.